all right. So we're back for another week of trade setup. It's all about putting things together and taking trades. So I want to hear what trades you took based on what, because I leave my drawings on the charts, until the following week. So what we talked about, did it happen? Did you take action? That's why I leave those drawings there. So if you recall, last week Tuesday we said we have a divergence taking place, and we were expecting price to close this uh, supply zone, and then we take it to the downside. I see 3 opportunities to the downside, so I want to know which one you took. So let's hear it. Okay. This Sorry, let me pause you for a second. This Monday or so Wednesday? Okay, so nothing during this period, you're saying, right? You waited until Monday to take your trade. Okay. So okay, so far so good. Okay. So, yes, so I'm kind of surprised you didn't close it until Thursday. Because Wednesday we talked exactly that this is going to happen on Wednesday. Right? And so yeah, why? My question is always why. It doesn't matter that it didn't happen. So the high of this bar is 314.15. So what are you talking about? $60. Okay. $312.04. So the first bar high was 312.41. So you waited until the next hour and you closed it a little bit above the open. Okay. This so one thing I want you to note in your journal. I really want you to write this down. I was supposed to close my trade on Wednesday. I forgot to close the trade on Wednesday. The reason I want you to write that down is this could have gone like this. Right? This could have gone like this. So you need to write them down so that you don't make that kind of mistake when you're trading real money. It's okay during paper trading, right? But when in real money, it's not okay. So you got lucky because what we had discussed was this purple line was our stop, right? I said 75% as soon as the market opens on Wednesday, 6:30 a.m. Wednesday, right? As soon as it opens, that was your 75% exit. Even if you had said it's an up day, I'm just going to wait a little bit, but we said close it before Powell speaks. right? So that 1030 bar, that was the latest you can wait to close it. And the 25% you put a stop here, you would have been stopped out. That's okay. Now again, this is very important, that and that's why I'm mentioning this, is because you missed it, you booked more profit, because even the 25%, instead of being stopped out, you closed it up here as well, right? So that more profit is a very, very expensive profit. What I mean by expensive is it'll psychologically make you think, oh, I'm going to wait next time as well. Right? This could happen because of X, because of Y. You'll give yourself a reason not to exit, and you'll have a much larger position. You're going to get a little bit cocky, and then you're going to get burnt. Right? So that's why I really wanted to journal this. Like personally, the way I write this, and I have done this before, I would say something like, I was stupid not to take this exit. Like I really write that down for myself, right? Because it reminds me, don't make this mistake again. But okay, so you close this trade. You're getting nervous. Okay. Okay. Which supply zone are we talking about? No, no, no. Like where do you see it in this week? In this week, like this week, or are you talking about this supply zone? Okay. 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 Where is your stop? Sorry, sorry. Your stop cannot be a W risk. Your stop is your risk. Okay. This here. So this is your stop, right? This is where I in. Yeah. This high. Yeah. Okay. Well, this is already closed, right? So I don't even think about 50% anymore. Like practically, this is gone for me, right? just as a reminder. Okay, and your exit is somewhere here. Yeah. Okay. Okay. So yeah, you had a pretty tight stop. So can you walk me through your reason why you have a tight stop? Because like you're not giving yourself a wiggle room. Sometimes you do that on purpose. I want to understand what was your purpose. So I think that's okay. But for me personally, when I don't have an opportunity to monitor the trade very closely, I want to give it a little bit more wiggle room actually, because you're entering right at that hammer, which only has a $2 range, right? If you look at the number down here it's $1.99, right? It's only $1.99 range bar that you're looking at. So by making the stop too tight, you're not giving it room to breathe. Uh, you had two things in your favor. One, you have this supply zone which acted as resistance, but the other thing is you're making lower lows and not lower highs, not quite lower lows yet at this point, but you were making two lower highs, right? That's kind of why it worked out for you. But I prefer to give it a little bit wiggle room. For me, that wiggle room is slightly above the previous swing high, right? So yes, that means you don't exit yet because our exit comes a lot farther out here, right? Then we're still in this trade. What happens is when you're in a trade like this and you have this wider stop, and uh, you you get to a point where, okay, I'm gonna remove this. So you get to a point where you see prices going in your favor, and then it creates a consolidation. You can decide to exit. That becomes as if you had a tighter stop for that 2 to 1 ratio. But that, to me, that's irrelevant, right? The 2 to 1 ratio is irrelevant. I just want to get it right all the time as much as possible. So, when I'm looking at my 2 minutes every hour, I come here and say, oh, okay, it came down, but it didn't stay down. Next hour, okay, it played there, it keeps playing there. I don't want this up bar, so I might exit a little bit sooner, which is about the place where you exited, right? 205.99, but I think you exited at 205 19 or something like that, right? Yeah, 205.19. So yes, 305.19. So here you have 306.06, which is $1 higher than what you wanted. So 305.19, somewhere in this range you would exit by by having the right stop level. And by right, I'm not saying this is right always. I'm not saying this is your right versus my right. Like whatever you feel is adequate for that particular ticker, right? And the cues, they move in quite a good range on a daily basis. And this the second white number that you see is the average range, right? And so when you're looking at this, that average is about $2, right? 250, sometimes a little bit lower. So when you're looking at that, you want to give it a little bit of a wiggle room from your entry, which is 310.70 plus $2 is 312.70, and when we had it up here was 314.43, right? So you're really giving it some wiggle room, but it's okay. These are part of the things I want you to process. Keep in mind, I'm not saying you were wrong, right? So keep that in mind. Yeah. Yeah. So, what were you looking at? Were you looking at something like this? Yeah. The, here? This one. This one. Okay. And where does it go from here? I would do quite a bit, right? I would do quite a bit to kind of help me see where the possibilities are. Like this one is too tight, so I'll just ignore it. Yeah, like these two kind of line up, so that'll give you an idea. So I'm glad you did that, right? I'm glad you are taking those lessons and putting them into practice. Okay, right here, or is this one here, an inverted hammer? This one, okay. So first, you said this was not as strong. What does you mean by this was not as strong? Okay, so that's what you mean by clean hammer, right? But this is, to me, this is a clean hammer because it looks like a hammer. This actually looks better, better hammer than this one. But I understand now from your perspective. So here we're at an area of value, right? We have identified this supply zone as an area of value. Here, to me, this is not an area of value. So I don't even consider this, right? And plus, I'm already in a position here. I'm in a position. I'm not out of that position. I have no reason to add to it, but you can if you want. But what in a position like this where I've already said if it comes up here, I'm taking it down. I'm entering full position, right? I'm not entering partial position. I have full position on, and if I have full position on, I don't see a need where to add it. Something that might happen, and I said there were 3 opportunities to enter a trade. So one, when we came all the way up and it got rejected, right? We came all the way up and it got rejected. Even though this bar didn't close, some people might take this trade, but Powell is not done speaking. So to me, that I'm not comfortable taking this trade. But the next bar, when it keeps going down, this is where I might get tempted to take a trade. But in this instance, if I take a trade here, my stop is up here, and I have a very long distance to go, right, to hit my target. So this is one. I'm still in the trade. I'm not stopped out. I'm still in the trade, but I'm sweating, right? Because the very next day, it looks like it wanted to give that back. It's end of day. Depending on how I feel that day, I might or might not take the trade. I don't want to tell you I wouldn't take this trade because that now that I have hindsight, but it's possible that I could take this trade. So this is one opportunity to enter. Another one is once Powell is done speaking and the next day price comes up, but it gives me a lower high. So I would take this bar as almost as an engulfing, even though it's not fully engulfing, but I would take it and I'll take this trade here. And in that instance, this bar, I'm taking the low of this as my entry, and I'm still going to use this high as my stop, or I can use this high if I want, but I would use this high as my stop, and that gives me now a little bit of a better entry, right? And somewhere here's my exit. I'm still in the trade, but this is my second entry. Now here you might say if I get this inverted hammer, then I might tighten my stop, right? I will tighten it a little bit because I'm making a second high, yeah, right? Lower high second time. From this high to this high was my entry. I make another lower high. I might tighten that area. If I do, then I am definitely willing to take an earlier exit at least half my position, right? Because I've tightened it, right? So my risk now is smaller, but because of that, I will exit here, half that position. So that's a second entry possibility. If you're not comfortable with this position and you've only taken half the position, on this one is where you would add the other half. But not this one. This one to me is not at an area of value. Just that's just my style of trading, right? I look at those things. I really want to get to an area of value, not just any inverted hammer. And like you said, by clean, like to the left of it is not. This is not standing out by itself. even if you get this without an area of value, I prefer that over this some nowhere and it's not sticking out by itself. Okay, but I like your trade. I like that you've taken exit 100% or 50%. So you have runners. So now the big question is, here's your trade. Let's just redo your trade. Here's your stop. You've already exited one, and you're letting the other run. Let's just make it white so it doesn't exit. Where's your stop? So you 50% of your position you took off at 305.90, right? It's 50%. And where is your stop at that point? Yeah. Sure. Yeah. So here? Okay. This is good. Uh, this is one good stop. Another good stop is right a little bit lower than your entry. Either one works. Usually, what I do is, as soon as I take my exit, it's here. But when price starts to move down from there, I keep pushing this, right? I keep trading it. If I get bar after bar that's going down, I'm gonna keep pushing it down. But from here, you didn't get that, right? So it stayed sideways. So you kept it here. But if you said bar after bar, I might have already exited here because I have pushed my uh, stop lower. Because 3 bars in a row, it's lower, high, lower, low. But it's okay. Those ones you keep playing with. At least when it's sideways, remove another 25%. And then this white stop is okay. It's still profitable trade now. No matter what. Even up here, it's a profitable trade. Yeah. After hours, it's up. After hours, it's up. So it's positive. But it's okay. It's not a lot. So I'm not worried about that. Okay. All right. So now let's see. That's the only trade you took, right? Uh, yeah. Okay. Okay. Cool. Now what we want to see is, do we have any opportunity? So here you see, we get here, we take it to the downside, right? That was last week. Yeah, this was in spies. So same setup, except spies jumped up a lot more than Qs, right? Qs stayed down here, but spies are a little bit higher here. For the spies, okay, let's just remove these things. So Paul spoke right? So that's one we talked about. If I didn't take this, when the next day price goes up, and then you get this inverted hammer, we've already reached the area of value, and the price was rejected, right? It pushed all the way there and it got rejected, and then it created an inside bar with an inverted hammer. I take that trade right here. So this is my entry up here, my stop here, right? And you get your exit here, or you stop a little bit wider, then you don't take your exit. You don't take your exit, but then when you see this sideways movement, right, you either have your stop tighter, or you just say, hey, I don't like this action. I take exit, right? I take exit up here somewhere. Like that, and when you take your exit up here somewhere, it's almost 2 to 1 because you're tightening the stop. So that's where I would take that trade. And then, look at this. We closed this gap, right? When Paul spoke, we closed that gap. So, and then other opportunities, lower high, right? So another entry here. No, it's not. But it's close enough. It's close enough that I would say this high as a stop and target down here. This trade I would take, because again we came back, made lower high, came back, right? If I didn't take this trade, I take this trade. Okay, now we talked hindsight, right? So what happens next? What do we do next? Like in the spies, we didn't take any trade. So what's next? Well, it's a bit tricky now. We missed this trade. This trade is still intact. If this bar closed close to this entry, I might say, okay, if the next day opens slightly lower, I might say, let me just take that trade. It's as if I was taking the trade here. I might attempt that, but it's too far from that entry. I don't like chasing, so I just don't take this trade. Now what happens? What do we do is the big question. We have a demand zone here. So if price, so I want to see this, and if it tests it to go higher, I want to take this trade. I don't want to take the trade as soon as it touches here. I might if I get a very nice hammer. It comes here, it gives me a hammer, and then I'll just take it. But why? Because I will have a very tight stop. The bottom of that hammer is my stop. Nothing else, right? If I get a nice hammer here, the bottom of that hammer is my stop. So if it's a regular $2 bar, so my stop is about $2 away, maybe a little bit more room, so $3 away. So at $6 is my exit. So enter somewhere around 390, 396 is my exit, right? I don't have far to go to take that exit if I get a nice hammer. If I don't get a nice hammer, I want to see that price reversing with the upside. Overall, I'm still biased to the downside. Right? We still keep making lower highs, but we have within that lower high, we're making higher high and higher lows. So a little bit of sideways movement, a little bit tricky to trade. This is what I would do to go back to the downside. Only trade I would consider is if we push, so if we push but make lower high, and I get a nice inverted hammer here, and make sure that it is lower than this, right? This high must be lower than this, so somewhere around here, I'll take it to the downside. So this is my setup in the spice, which we might get, right? If the futures hold and they go slightly up tomorrow morning, this might be a nice entry to take it to the downside, right? This entry that you missed is giving you a better entry here. In this case, though, my stop is here. My stop is not up here. My stop is here. So this one, an entry somewhere here, stop somewhere here, and somewhere here is my first exit. Right? These lows would be my first exit. So that gives me that 2-to-1 ratio. Well, it's not, so the tightness comes from the chart, not from me saying, oh, I want a tight stop, right? That's not what I'm doing. Is the previous high, that's my stop, right? Slightly above that previous high is my stop, because I have a lower high here, and I'm going to make a lower high here. So you might even say this is too far, let's use this one, but wiggle room from here is about here. So that this is my entry setup for me. So one here, one down here, right? Every week we have both side entries. Same thing on the, yeah. What do you mean by as long as it gives you an area of value? My area of value is this demand zone. What other area of value will it give me? So what I want to enter to the upside is I want to use this as an area of value, and I want price to come down here to test this as support. It goes down here, it's support, it makes a high, and it makes a higher low. Using this again as support, I get a hammer, railroad tracks, engulfing here, I take it. Right? Here I, so the only reason I would take the second one versus the first one is first one is not a hammer. Right? Or a very nice engulfing. Even railroad tracks, I don't know if I want to take this. I want to see a very nice hammer here, or a very convincing engulfing bar here, then I'll take it. Hammer is better because my stop is a little bit tighter. Because if I'm wrong, I want to be wrong quickly, right? If it slices through this demand zone because of some manipulation or anything, I want to be wrong quickly and get out. Yeah, no. Yeah, in the queues, you're already in a trade. So right now for you, it's just about managing those trades. And because you're managing a trade, it's kind of hard to have a setup for a new trade. But the same concept applies, right? The same concept. If down here is our demand zone. So this is our demand zone. So what I want to see is for price to come here, test it, right? I want to see this for my entry. And to the downside, I guess if you get a lower high again, uh, is a good place to enter, right? So if you get a lower high, I was hesitant because you're already in a trade, but I want to think about anybody who watches this video who's not already in a trade. It's the same setup as the spies. You get a lower high, an inverted hammer. Yeah, you get a lower high and inverted hammer. You take that trade. You take that trade to the downside. Yeah, same setup. Same setup, but your entry has to be lower high. So we have this high as well. So it has to be lower high. So make sure it's lower high. If it's not lower high, then I'm not confident that, right? Then it could be just going back up. Yeah. But because it's important to clarify, right? Because in this on the daily, we have not cleared the 78.6. Right? This downtrend has not cleared 78.6. It's attempting, it's playing around there, it's attempting, but we have not cleared it. That's why I will remain biased to the downside. Right? Same thing for the spies. It attempted to clear it, it closed above it, but only for 1 day, and then it's back down here. Right? In the Qs, we're a little bit more closer than we are in the spies. That's why you see the spies trying to play catch up. Like here, how price is up here versus the Qs down here, right? Spies is somewhere like up here, relatively speaking. So because it's trying to play catch up. But you know, in the Qs we're very close to that 78.6. In the spies we have quite a ways to go, right? We're like around that close to that 50%, this 50%, not this uptrend, right? Close to this 60%. And in this recent uptrend, that has not closed below 78.6. So you can say in the bigger downtrend, we have a smaller uptrend which is still intact, right? And so that hasn't reversed yet. So that's why you play it cautious. Like you take trades, but you want to take your exit quicker. When you have a wide stop and wider exits, and you see price consolidating, we exit. We exit because there's a lot of things could happen, and I don't like to give back profit. So in the bigger picture, both the spies and the Qs have not cleared the 78.6 to the downside. So I'm still biased to the downside, and I'm going to take those trades accordingly. Right, I'm going to take those trades accordingly. And in the Qs, you can see we're close to it, right? And the spies, unless I move this, right? This is how you can see we're so far away from it. We're closer to this 50% line, right? Below the 61.8. This is 50% line. And then this uptrend, the solid fib, we have tested that 78.6. We've tested the 78, but then we've tested the 61.8 again. So we're staying in that range. So these are the two that I see as a setup. So for you in the Qs, you have an exit and then an entry to the other side that you can take. In the spies, you have two entries you can take. These are our setups. Yeah, and if you go back to the last few weeks, right, we give ourselves two conditions, to the upside, to the downside. One of them is happening, right? One of them is happening. It's not like we say if this happens, we take to the downside and it doesn't happen, right? It doesn't just go blow through it. those things are taking place. So if it blows through it, then we need to reassess, because we, like for me, I want to remove this. If this keeps going to the upside from here, that means we're making higher high than this. We are reassessing on where to enter, because this is a sideways market, right? We're not 15-minute, 5-minute chart traders, right? We're swing traders looking for, those hourly bars. So for that, it's a little bit different strategy, right? On a 1 minute, 5-minute, 10-minute, 15-minute bars, they will say they can get in quicker, but they also exit quicker because they want to exit before they get up here. So let's just see, and then we reassess next week. Yeah, because we're done, right? But I have one up here. I have one up here I'm looking at, right? This one here. This one here, it comes right at that 78.6. When things start to line up, like there's a big meaning to it. Right? Yeah, so this is going to they line up. So that's why we just play careful. We take full position, but we monitor it, and then we monitor it some more. 2 minutes is all you need every hour. 12 minutes a day. All right. Okay. That's it for today.